You hit six figures in the savings account. Family dinners get quieter in a good way. Then you open a property app, filter for something livable near work, and the gap between $100,000 saved and approved to buy shows up fast. Stay with this and you will get one calm framework, not a lecture about trying harder. We will separate cash at settlement from borrowing capacity, walk three labeled household scenarios, and show where $100,000 is enough and where it is not. We are not finance professionals. This uses official lending and stamp duty data plus illustrative serviceability maths so you can see which ceiling binds your household. The achievement is real. $100,000 is serious money in Australia. The unfair part is that online calculators often stop at the deposit line, as if stamp duty, legal fees, and a stress-rate borrowing test were optional footnotes. First home buyer activity is rising again. The ABS reported new first home buyer loan commitments rose 6.8% to 31,783 in the December 2025 quarter. The average loan size jumped a record 8.5% to $607,624. More people are buying sooner and borrowing larger amounts. Three separate filters decide whether you can purchase: cash at settlement, borrowing capacity under a stressed rate, and whether the home you want exists at a price your cash and loan together can reach. Cash at settlement means deposit plus stamp duty, transfer fees, legal costs, building and pest reports, and a buffer for the first month of ownership, not just the round number in your savings app. Borrowing capacity means lenders stress your repayments above the headline rate, commonly by about 3 percentage points, and cap debt as a share of gross income. They haircut living expenses too. The bank approves a repayment you can survive in a stress-rate world, not a trophy number that matches your savings story. That is why two households with the same $100,000 deposit can receive wildly different loan limits. Property price reality is the third filter. The home you want must exist at a price your cash and loan together can reach. Most deposit guides stop after step 1. This video holds all three together for the $100,000 milestone. Stamp duty concessions help first home buyers, but thresholds have not kept pace with medians in many capital cities. In one major southern state, first home buyers pay no duty on homes valued at $600,000 or less, with a tapered concession up to $750,000, then standard duty above that. In another eastern state, a full transfer duty exemption can apply on eligible homes up to $800,000, with a concessional rate below $1 million. Two buyers with identical $100,000 balances can face different settlement bills on the same headline price depending on state and value. The lesson: your milestone deposit is only half the cash story. The duty line on the contract can swallow tens of thousands before you pick up the keys. Before the three household stories, one line-item example shows why the deposit number alone misleads. Assume a first home buyer purchasing an established home at $700,000, using the full $100,000 as the deposit contribution. Loan $600,000 at settlement. Stamp duty on that price under a first home buyer sliding scale is order of magnitude $24,500. Add legal and lender fees near $3,500 plus reports. Total cash before moving costs lands around $128,800. If savings equal $100,000 only, you are roughly $28,800 short, even before furniture. That shortfall is the "why cannot I buy yet" feeling in spreadsheet form. Living at home while saving helps because it grows the total cash pile, not just the deposit line in your head. Every month without a full market rent bill is another chunk that can cover duty, fees, or the buffer lenders quietly expect. There is no national yes or no, only trade-offs. Three plainly labeled households next. Borrowing estimates assume roughly 6.2% variable repayments assessed near 9.2% with minimal other debts. Your lender may differ. Each scenario uses the same $100,000 savings milestone but a different income shape, property goal, and state duty treatment. Private question, not for the comments, for your kitchen table. Which ceiling binds you first? Cash at settlement or income serviceability? Your answer changes what you do with the next 6 months of saving. Household A, combined income $148,000, savings $100,000 partly built while living with family. Goal, established three-bedroom house near $880,000 below many capital city house medians but above unit territory. Approximate max borrowing under stressed serviceability, $590,000. Max purchase with $100,000 deposit before duty, $690,000. Target $880,000. Bottleneck, income cap near $690,000 and cash stack also short for the house goal. This couple is not bad with money. They are misaligned on two axes. Realistic pivots. Target a 620 to 680,000 unit or townhouse where duty concessions return, widen the search corridor, or keep renting while income climbs. None of those pivots erase the achievement, they change the price band until cash and borrowing ceilings overlap. Household B, single income $108,000, savings $100,000 from years of disciplined saving. Goal, two-bedroom apartment around $750,000 in a major East Coast market. Max borrowing near $450,000. Max purchase with deposit near $550,000. Target $750,000. Bottleneck, income and serviceability, not the deposit. $100,000 sits necessary but insufficient because the bank will not extend a large enough loan. Remember the national average first home buyer loan near $607,624. Those borrowers typically carry higher household incomes or co-borrowers. Your deposit milestone does not automatically place you at the national average approval. Household C, combined income $116,000, savings $100,000, goal, established house near $520,000 in a regional city, max borrowing near $475,000, max purchase near $575,000, target $520,000, stamp duty nil under the $600,000 exemption. For this household, $100,000 is enough on paper if they keep a separate emergency bucket after settlement. Side by side in thousands, household A max $690, target $880. Household B max $550, target $750. Household C max $575, target $520, the only one where target sits below max. Calculate max purchase twice. Once from savings, deposit plus duty plus fees. Once from income, stressed borrowing plus deposit. Use whichever is lower as your working cap before you fall in love with a listing. If the income cap sits $200,000 below your dream suburb median, no amount of deposit pride fixes that mismatch without a price change or a co-borrower. Low deposit schemes can shift how much cash you need upfront on eligible purchases. That matters if household A downsizes the target. A $650,000 purchase with a 5% contribution frees cash for duty and buffers, but the loan grows and repayments rise. Schemes bring forward entry. They do not make the home cheaper. A guarantee can remove lender's mortgage insurance and cut the upfront deposit. It does not replace income serviceability, stamp duty on expensive homes, or a post-settlement cash buffer. At $100,000 saved, split the pile before you celebrate. Label how much is deposit versus duty and fees versus untouchable emergency buffer. Get two numbers from a broker, maximum loan and comfortable loan, the sleep at night repayment. Treat the comfortable number as your real search cap even when the maximum number looks flattering on paper. Map both numbers to realistic price points, not one national median. Stress test childcare, car replacement, and rate rises. Decide time horizon. If you may need to move within 3 years, a thin buffer hurts more. Trap 1, counting pre-approval as the right price. Valuations, credit changes, or lender policy shifts can narrow the window before settlement. Trap 2, ignoring the duty cliff. Moving from just under $600,000 to just over can jump stamp duty from zero to a partial bill for first home buyers in one major state. A threshold unchanged since 2017 while medians moved on. Trap 3, assuming rent equals mortgage. Ownership adds rates, insurance, maintenance, and strata. Trap 4, draining every dollar into the deposit. Keeping even $10,000 to $20,000 outside the deposit line is boring and useful. A hot water system or unexpected levy in month 2 should not force credit card debt the week after settlement. If you're still building toward 100,000, the habit layer matters as much as the property layer. Saving the number is an achievement. Buying well is a separate optimization problem. A $100,000 deposit story depends on which household you are. One regional scenario shows it can be genuinely sufficient. Two capital city scenarios show the more common frustration. The deposit milestone arrives before income or price reality catches up. Saving 100,000 is not failure when you still cannot buy the home you pictured. It usually means the next lever is price point, co-borrowing, income, location, or patience. Run the two ceiling maths, respect stamp duty and buffers, and let the smaller number guide the search. If this helped you see why 6 figures saved does not always equal approved to buy, subscribe for more practical Australian money and property videos. We will keep turning foggy household decisions into plain maps you can use.